They say FHA loans are flexible, and that's true. But in 2025, flexibility isn't saving deals. These 10 hidden issues are killing FHA loans right before closing, and most buyers, agents, and even some lenders don't see them coming. With insurance premium rising, stricter underwriting, and tighter condo project rules, many FHA deals are collapsing in the final stretch. And the worst part, most of the issues could have been avoided with the right preparation. If you're a buyer, a realtor, or even a loan officer watching this, stick around. Knowing these deal killers can literally save you weeks of frustration and thousands in lost deposits. Before we dive in, don't forget to hit that subscribe button and follow me for weekly insights. That helps you win in real estate. This is your Mortgage Cafe with Angelica, where I serve you a fresh sip of wisdom on everything mortgage and real estate. I'm Angelica Obregon with Key Mortgages, your local loan officer serving Georgia, the Low Country, and South Florida. Let's break down the 10 biggest FHA deal killers in 2025 and how to avoid them. Point 1. Insurance shock. This increases your DTI. So we all know that insurance have skyrocketed. Homeowners insurance, flood insurance, wildfire, wind coverage, you name it. And when the real insurance quote comes in higher than expected, that debt to income ratio can blow up your approval. So a little tip, always get binded quotes early. Don't rely on estimated numbers on your loan worksheet. Condo project problem. So condo deals are collapsing left and right because FHA has strict rules on financial health. Things like reserves, insurance, coverage, and HOA delinquency. If the HOA is underfunded or has special assessment, your loan could get denied, even if you're fully qualified. So a little tip for this, have your lender review the condo project early and request HOA budgets, insurance, and delinquencies report before making an offer. Point 3, property flip timelines. This one surprises a lot of buyers. If a property was bought or resold within 90 days, FHA says not eligible. Between 91 and 180 days, if the price doubled, you might need 2 appraisals. Always check when the seller recorded the deed before submitting your offer. 4, federal debt flags. If you ever defaulted on a federal loan, student loans, IRS debt is gonna show up, and FHA will not approve the loan until it's clear. A little tip for this one, if you're on a repayment or rehab plan, make sure you've made at least 3 documented payments before applying. 5, large or unverified deposits. FHA is strict about sourcing funds. If you drop a large cash deposit or transfer money from crypto without documentation, those funds can be used for closing. A little tip, seize your funds for 60 days or document every source with gift letters, bills of sale, or tax refund proof. If you learned something new so far, hit that like button, subscribe, and comment below. It helps me reach more buyers and agents who need this information. Point 6, self-sufficiency test on 3 to 4 units. If you're buying a triplex or fourplex, 75% of the rental income must cover the entire mortgage payment. But with today's prices and interest rate, many properties just don't qualify. A little tip for this one, run the numbers early. Sometimes increasing your down payment or finding stronger rental income properties can make it work. Point 7, short appraisals and stick in FHA appraisal. When an appraisal comes in low, it can kill the deal unless the buyer has extra cash or the seller agrees to lower the price. And remember, FHA appraisals stick to the property for months, affecting the next buyer too. A little tip, always include appraisal contingencies and review comps before submitting a high offer. Point 8, property condition problems. FHA doesn't do as is. Peeling paint, broken windows, missing handrails, or an old roof can stop an approval cold. A little tip, walk through the home with a critical eye before the appraisal. Negotiate repairs up front or have a quick plan to fix flagged items. 9, income instability. Switching jobs, going self-employed recently, or declining income all can make automated underwriting fail. Little tip, be transparent early. Provide full documentation or wait until your income stabilizes. Adding a co-borrower can sometimes save the deal. And we made it to point 10, new construction appraisal issues. FHA requires valid comparable sales inside and outside the subdivision. If you're buying in a new phase with no close comps yet, the appraisal might not pass. Little tip, verify that the builder has HOA docs, insurance, and recent comps before moving forward. The biggest FHA deal killers this year are insurance increases and condo projects problems, but all of them can be avoided with preparation. Plan early, source your funds properly, and work with a lender who knows these guidelines inside and out. So if you're looking to buy in the Savannah area, Pooler, or South Florida, I'm your girl. I'd love to help you with your mortgage journey. That's your sip of wisdom from the Mortgage Cafe with Angelica. See you next video.